Yeah, in certain sections, it's almost necessitated in order to drive momentum. There's been an oversaturation, I'd say, in the commodity level of Hamptons homes. So I think if you're looking at these micro markets, you have to be very specific about the anomalistic nature of how certain properties are priced. Because we don't use quantifiable metrics in the market, it's easy for someone to be pioneering or to put it out there at a higher number in the hopes that they can capitalize on someone's pure desire to take the asset down. So I think if you're looking at the Hamptons, you have to look at it as a triangle. And at the base of the market, there's been a tremendous push of supply. At the same time, a huge appreciation in pricing. But there's certain pockets of the Hamptons that are performing quite well and that are where they should be in comparison to the trajectory of the years prior. So I think as a whole, we've seen a cool down. But in certain areas, there's definitely rarity elements of the market that keep driving the prices up.
There's this Bridgehampton home, Cody, that I think you know about. Beyonce and Jay-Z rented it for $400,000 a month. It took a $10 million price cut. Seems like a lot. Where in that triangle is this home? I would think that a home like this would be at the very tip of the triangle, and maybe $10 million, maybe it wouldn't get cut that much.
Yeah, believe it or not, it's not at the tip. I represent the home. I'm very familiar with it. I think there's a shifting demand in what people are looking for, and that home in particular has a program that you could never get again. It has a lot of pre-existing non-conforming elements, but at the same time, the sellers are looking to capitalize on the next chapter of their life, and so they're trying to be, I'd say, more price sensitive to the market, even though they don't need to be. They're trying to give somebody the sense of value, so that's the reason for the price cut. And I think if you are looking at all of these major swings in prices, there's typically a story behind it. You know, sellers in this category or at the tip of the pyramid or even the middle section, they don't necessarily need to ever sell these homes. It's more about desire and motivation, whether they're buying a home somewhere else or they're making a trust for their kids or whatever it may be. So you have to look at it on a circumstance basis and not just this broad brush. They want to make it in line with the market.
Pull out your broad brush here as we listen to you and we listen to others talk about big price cuts at the highest ends out in the Hamptons or whether it's New York City. I have to guess that even with those price cuts, 80 or 90% of the sellers are still making money on the properties they bought.
It's a good chance. It's totally dependent upon when they acquired it.
Sure.
A lot of these Hamptons homes, the basis of them are quite low. They could have bought it decades ago.
In which case they'd be making a lot of money. Let me squeeze in one more quick question before we have to go. You talked about different microclimates in terms of the real estate market out there. What's the weakest microclimate right now by way of price point?
I think a lot of speculative developers were looking at quality locations, 2-acre parcels of land. They're buying for $6 or $7 million. They're building for $4 to $6 million. And they were trying to make a 30 to 40% margin. So that portion of the market of new construction homes that have been lingering in that, call it, mid to high teens, we've seen the most stagnancy in that portion of the market. But at the same time, it's been a great portion of the market after they've gone through their learning curve for buyers to capitalize on taking those assets and making them their own. So I think it just is a matter of timing on that section of the market until they come down to, I'd say, a more realistic correlated number to the demand.